Okay, what is going on, CYPRX advanced YouTubers? Welcome back to the CYPRX YouTube page. As always, if you're interested in learning about cryptocurrencies, commodities, indices, foreign exchange, how to trade them, utilizing technical analysis properly, please go ahead and consider subscribing to the YouTube channel. We really do appreciate all the love and the support that everybody's been showing this page. Don't forget, in the next video breakdown on Casper, we are going to be dropping a video with instructions on how you can participate in the $100 Casper giveaway. And big thanks for everybody pushing this YouTube channel to over 2,000 YouTube subscribers. In today's video breakdown, guys, is going to be straight technical analysis, no fundamentals. So if you're interested in learning how to properly trade these markets utilizing technical analysis, stick around for this video. We're going to be going over some BTC and XRP price action. I'm going to show you guys some striking similarities. Okay, again, I've attempted to teach you guys this strategy multiple times, and I'm going to show you why it is so lethal in the market. I'm going to show you all how the market moves in tandem via the banking institutions grabbing retail liquidity. I'm going to give you guys as many gems as possible in this video breakdown. Okay, now going into both of these video breakdowns, just some general overviews and some basics. Okay, I've told you guys multiple times that previous to every single session, whether it be New York, London, or Asia, doesn't realistically matter. You guys know I have this indicator on until session opens that just dictates, and determines for us, gives us a visual perspective of 8 a.m. every single session. Now, my charts right now currently are set to Los Angeles UTC, but if I change them to New York UTC, okay, we are now operating on New York Eastern Standard Time. So our charts now are set to Eastern Standard Time, okay? And we can see that prior to 8:30 a.m., I've always told you guys and mentioned to you that we have early buyers and early sellers. These are premature individuals in the market. They're individuals that have no patience. They can't wait until, New York session plays out, some type of move that the banking institutions want to capitalize on. They involve themselves too early on in the market, and the banking institutions, mark my words, you guys can go back and hindsight test this just to prove my theory and what it is that I teach to you guys, that this works almost, I'd say, about 95 to 99% of the time. And the reason why I say that is because sometimes there's buy side liquidity, sometimes there's sell side liquidity. Either way, okay, the market decides to take both or take one or the other. Okay, so that's why I say 95 to 99% of the time. Okay, because there's still that 5% where it only takes buy side liquidity or only takes sell side liquidity, or that 99% of the time where it takes both, and you, because you don't understand the directional bias of the market and how price reacts to psychological levels and the in-depth methodologies that I teach, which way the direction's going, and most likely you're manipulated by price action. So you get caught on the wrong side of the market. In order to avoid all that, I'm going to attempt to continue to teach you guys how to identify which direction the market is going to go. So pay attention, okay? This is BTC, and then I'm going to go over XRP, okay? Now I'm going to show you guys literally how all I did, okay? What in the bananas? I'm going to show you guys how all I did on both of these chart breakdowns, that's why, because this is the 1 minute chart, okay? All I did literally was copy and paste the same exact drawings just to show you guys the insane accuracy that this strategy has, okay? Not only that, obviously, of course, that's if you utilize it properly, if you as an individual choose to utilize it properly, but just to show you guys that the market does the same thing day in and day out across the whole entire crypto space. So I'm utilizing BTC and XRP as an example, but you guys can go back test this in any cryptocurrency, any commodity, any indice, and any foreign exchange pair. Okay, so let's start with XRP. Prior to the New York session, let's focus on what London session did. And I'm going to attempt to do this fast because my computer might potentially die. Okay, but so we see London buyers, retail liquidity in the form of a double bottom formation right here. Okay, we can see that the market came down, created a double bottom formation. London session caught buying opportunities. Okay, when price was passed over to New York session, you can see here how in this area we created some type of retail resistance. Let me get rid of this consolidation box. Okay, but we created this retail resistance pattern in the form of a double top. Okay, from A back down into B, and then from A up into B. Okay, you see this double top retail pattern. Now again, what can we identify? We can identify that there are retail resistance traders premature to New York session attempting to sell this in the form of a double top pattern. All right, but we're not even worried about that yet. Okay, what are we worried about? I've told you guys multiple times, pay attention to early buyers as well. And look at this. Early buyers premature to 8:30 a.m. Eastern Standard Time. Now, this is a hindsight back test, so don't be, in the description down below, oh, blah, blah, blah. All you do is hindsight test. Yes, this is a hindsight test. I'm showing you guys the similarities in the market. Okay, look at this. Prior to 8:30 a.m., This right here, this vertical dotted line that I have on for you guys is marking 8:30 a.m. You can look down at the bottom of the charts. We see 8:30 a.m. Eastern Standard Time. We see buyers, 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 premature sellers, as well as sellers in the form of retail resistance traders. Look what the market does, guys. It's so simplistic. It comes, it hunts the stop losses from retail resistance traders in the form of these double tops, creates a triple top, and so many traders would have been thinking, oh my gosh, this is the move. This is a triple top. And look at that. They flooded in sell positions. But this was an institutional order from A into B to hunt the retail liquidity from this double top formation. Okay? So the bank and institutions were simply just grabbing orders from this high and this high. I hope you guys are catching on so far. All right, and I hope that I'm not going too fast. Then what happened after that? We'll jump down to, let's say, the 3-minute time frame. Okay, so you guys can see fractal structure. Pay attention to the similarities. Again, what I'm going to cover in BTC as well. We dump into a psychological level. Again, this is a key indication to us here at CYPRX. Again, I can't give you guys all the gems on how to read price action and volume and things of that nature at these psychological levels. That's for the CYPRX advanced students, but look at this, okay? 59250, psychological level. We see a massive rejection and a break of fractal structure from that psychological level. That to us is an indication that this was a liquidity grab, not a bearish dump, not an actual bearish dump. Why? Because if this was an actual bearish dump, price would have retraced, and instead of making a higher low and continuing the definition of an uptrend, it would have done what? It would have made a lower high, broken the psychological level, made a new low, and continued to make the definition of a downtrend, which is a lower low, lower high. It failed to do that. And instead, from the rejection of the psychological level, after the grab of all this internal liquidity, what do I mean by internal liquidity? Look at this. We have London session double bottom patterns here, where London session retail buyers were able to capitalize on a buy position from A into B. Then we see premature New York session buyers in this area prior to 8:30 a.m. They were all taken out of the market, okay, from this move and this dump into this internal liquidity, okay? Are you guys picking up what I'm putting down so far? I hope that I'm not, again, going too fast, okay? So after the rejection of the psychological level, what can we see? Jumping down to now, let's say the 2-minute time frame, okay? We see a rejection of the psychological level. We see a fractal break of structure. What do I mean by that? We see internal structure, lower high, lower low, lower high, lower low, lower high, low. This is structure. These are structure points right here. Okay, and look what the market does. It reverses, rejects the psychological level, and creates a new structural point high. Pulls back, creates a new higher low, impulsive move again, and creates a new high. Pull back, creates a new higher low, impulsive move that creates a new high. Impulsive move back that creates a grab of internal liquidity, and then break structure again. So now we are respecting the definition of what? Bullish order flow, or a temporary what? Uptrend. So if we want to get on this move to the upside, okay, we have to identify structure properly. And look at this. If we go to the 5-minute chart, how could we have caught a nice, decent risk to reward ratio of 1 to 3? All right, taking again the significance and what I teach you guys, the move after the liquidity grab, spread these charts out just a little bit. I'm trying to go fast because my computer's dying, so I do apologize, guys. Okay, but after the grab of liquidity here, we can see at the 59250 level, we create a significant higher low. So if we take our Fibonacci, okay, if you click the Fibonacci tool, okay, we take our Fibonacci from the higher low that was created after the liquidity grab, which is this higher low right here, okay? If I just delete all this so it doesn't get confusing for you guys and you guys can actually see that higher low. Let me get rid of all these internal drawings. Boom, 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 boom. Okay, cool. You see this little spike right here. On the lower time frame, I've showed you guys how that was a higher low in comparison to the previous one at the 59250 level that led to a break of structure from this A to B move. Now, overall, this is the most significant higher low that was created before the overall A to B move that broke through the retail resistance pattern right here in the form of this triple top formation. Okay, so we can take our Fibonacci from this low to the high, extend that over, and if we want to get on the moving train where the bank and institutions have now grabbed liquidity to the upside in the form of retail sell positions, they pull price action back, and again, that sweet zone, the 70 to 79% discount, if you're just entering based off of a methodology of a 1 to 3 risk reward ratio, right? Look at this. This was a nice 1 to 3 risk reward ratio on XRP USD that you could have called today utilizing the CYPRX methodologies. Now, again, this is not going into detail. This is just an overall breakdown of price action and what happened today. I don't go into, the lower seconds chart and how to catch these impulsive moves down here in this area. This is just general basic understanding of how the market reverses, pushes and pulls every single day, giving you guys specific time frames a little bit more in detail, right? Giving you that 830 perimeter. There's so much more that I give to the CYPRX advanced students. This is just the basics for you guys here on YouTube. And then again, going against the methodologies that the majority of individuals utilize to trade these markets, which is what? Trading retail patterns. We trade against those because that's what the banking institutions do. Look at how the banking institutions immediately targeted what? Retail double tops here. Then they came to target retail double bottoms here. And then they had an impulsive move that came to hunt the stop losses from this retail triple top here. Okay? You guys see how that works? We had double bottoms here, right? That were taken out. Double tops here that were taken out here. Then we had a triple top pattern created. The market came back for the double bottom here and then came back for the triple tops here. Okay? I hope that's not confusing. All right? You guys see how the banking institutions trade against retail patterns to take retail trading stop loss. Okay? So going over to Bitcoin, I'm going to show you guys the similarity in the market. I'm going to show you guys the consistency of what the banking institutions do on a day-to-day basis. Okay? So literally all I did was I copy and pasted the same exact drawings just to prove a point for you guys. I didn't change anything. I didn't change any drawings. I literally the same exact markings that I just showed you guys on XRP. The same thing happened on Bitcoin. Okay? Just to show you guys how manipulative this market is. It did the same exact thing. So here you see a double bottom formation beneath London session lows. Boom, boom. That's a retail pattern. London session was able to capitalize on buy positions from there. Okay, but they left behind retail double bottom patterns. So what lies beneath here logically? Retail stop losses, right? In the form of buy position stop losses. Okay, where smart individuals had a protective stop loss beneath these double bottom patterns. Okay, and they were able to capitalize on this move. However, the banking institutions, if you want to trade in tandem with them, they 9 times out of 10 come back for these stop losses. And look at this. Okay, again, if we zoom in right here in this area, same thing that we see on XRP. Okay, let me make this a little bit bigger. All right, so we see premature New York session buyers and sellers. How? Here's our 8:30 a.m. indicator right here. Look down at the bottom of my charts. You see 8:30 a.m. Eastern Standard Time. Okay. Prior to this time, what can we see? We see buyers in this area right here, right here, right here. This is a triple bottom formation. Well, we can imagine retail traders were looking at this. Let me show you. Let me hit the replay tool for you guys real fast. Retail traders most likely were looking at this and they were like, oh my gosh, about to moon. How many how many YouTubers were probably like, he's about to moon? They were probably drawing some type of supportive box right here, right? And then they were flooding in buy positions right here because of retail supportive patterns. Their positions probably look something like this, okay? The market makers know that those patterns exist. So that was one retail position pattern that the market was trading against, all right? The second one were what? Retail resistance traders here, here, and here. We can imagine that they were drawing some type of resistance area here in this general area. Again, premature to New York session open, 8:30 a.m. Why do I say 8:30 a.m.? Let's think about logically what the banking institutions are. And we have a trader, okay, who is enrolled in the CYPRX advanced course material. He's a student. He's an outstanding student, and he actually works for a banking institution in Portugal. And he's confirmed everything that I teach to the students, to the general public. I mean, it's insane. Banking institutional traders, they're individuals just like you and I. They're normal human beings, but they have more money and more technology than us, okay? Now, think about their time frame. If they're an institutional trader that works for a bank in New York City, okay, what time do they usually most likely wake up? 5:30, 6 a.m., right? And then from 6 a.m. to maybe 7:30 a.m., right, they're driving to work, getting ready, making it to the banking institution. By 7:30 a.m., 8 a.m., they're sitting at their computers. They're turning their computers on. They're reading news. They're looking at the market. They're deciding what institutional orders they're going to make for the day. And then finally, around 8:30 to 9 a.m. is when they put in their actual institutional order. So what controls the market when bank and institutional traders, when physical traders are not sitting at their trading desks? AI. Okay, so that is when the majority of manipulation happens prior to 8:30 a.m. Again, to give you guys that visual perspective. Okay, and again, this is all confirmed from a trader that we have in the CYPRX Advanced Student Course material who works for a banking institution. Okay, just to prove a point to you guys that we're not joking here. We're not messing around. I'm seriously trying to teach you guys proper price action strategies, not this order block, Wycovian, resistance, support, bullcrap that you can find on YouTube and baby pips for free. Okay, none of the information that is in the CYPRX 2.0 content you can find on the internet anywhere or in any trading book. And I've read personally over 10 trading books. You can't find any of the information that is in our course material on the internet or in any trading book. Okay, this is just the basics that I'm teaching you guys on YouTube. So what do we see here? A retail triple top formation and a retail triple bottom formation. So retail support resistance. Okay. What do the banking institutions do? Let me get rid of the replay tool. Look what the banking institutions do, guys. It is sickening. Again, proving the theories that I teach here on the YouTube channel. Look what they do. They come, they attack retail stop losses that exist all in this area. But before they move the market higher, they come back for retail buy position stop losses. So they forcefully push their way after 8:30 a.m. from A into B to forcefully push their way into all the stop losses that exist in this area, in this shaded area. Okay, then they pull back, not forgetting the retail stop losses that exist beneath this triple bottom formation and then London session double bottom formation right here. Look at this. If we look at where this wick right here dipped into, it came to take out any liquidity that existed in the form of buy positions in this area. Okay, so now look what the banking institutions have done. They've taken sell positions and they've taken buy positions. Now look at the significance, again, that I showed you guys on XRP, a rejection of the psychological level 36007.50. You guys see what I'm seeing? Now from the rejection of this psychological level, look what we can see. I'll go to the 1 minute chart. Okay, it's insane. Same thing that we see on XRP. Scrolling all the way over, from the rejection of the psychological level, what does it lead to? How can we determine that this A to B move was a false dump and a grab of liquidity instead of a bearish move? Because if this was a proper bearish move, the market would have not have pulled back, broken previous structure highs, okay, created a higher low that led to a break of structure, a higher low, and a bullish continuational break of structure, creating a new high. What would the market have done? It wouldn't have done that. It would have created a lower high, created a lower low, created a lower high, broken the psychological level, and continued its downtrend. Okay, where we could have looked to capitalize on bearish confirmational moves from these sell position highs here. However, we did not get that. We got a rejection of the psychological level that led to a fractal break of structure. This is a key indicator for us here at CYPRX and for you guys on the CYPRX YouTube, okay, who have this information. You guys can go back and watch any videos down at the bottom. I know that a lot of the videos on YouTube that I've posted back in the day when the YouTube was very first getting started, guys, that information is key. Go check that stuff out, okay? Even if it's on the foreign exchange market and you're just trying to trade cryptocurrencies, the same methodologies apply. Look at this. We see a bullish move away from the psychological level, 36007.50. Okay, that leads to a break of structure and leads to a significant higher low. From this higher low, what can we see? Another bullish break of structure. So now we have an internal A to B move that led to a break of structure. So we have a higher high, a higher low, and a higher high. This is now the definition of an uptrend. Higher high, higher low, higher high. That broke structure. So if we want to get in on the moving train, okay, we need to capitalize and wait on a pullback. This is what's called properly buying the dip. Okay, everybody else is guessing dips, and that is why they're getting taken out of the market. They're not waiting for bullish confirmation. So what do we do here at CYPRX? We wait for a proper dip buying opportunity, and we ride the wave back to the upside. Okay, I hope that this is making sense to you guys. I hope that it's not gibberish, and I hope that people that really are trying to learn price action properly capitalize on this information. But what can we see? If we take our Fibonacci, okay, how to properly draw your fib from a significant higher low that leads to a break of structure after bullish confirmation, we can see that this is a higher high. We're simply waiting for price to pull back into that sweet spot that the banking institutions like to fill orders at, which is the 70 to 79% discount. Anywhere beneath the 70% discount, from 70 and between 70 and 100% discount. And what do we see? A 70% discount, 79% discount retracement, and boom, institutional money gets put back into Bitcoin. And what can we see? A beautiful risk to reward ratio. This was a RR of 1 to 6 on Bitcoin today. The same exact methodologies for Bitcoin you could have utilized on XRP, and you didn't have to wait for any fundamentals. You didn't have to wait for the bear market to be over on Bitcoin. You didn't have to wait for XRP, SEC litigation clarity. You didn't have to wait for John Deaton's next tweet. You didn't have to wait for all these YouTubers to give you bullish signals. No, you just read price action properly. And on XRP, again, hypothetically speaking, if you were trading, let's just say on a $10,000 account, 3%, you would have made $300. $100,000 account, you would have made $3,000. Okay, same thing with Bitcoin. This is a 6% trade. You would have made on a $100,000 account $6,000. On a $10,000 account, $600. Or excuse me, $60 on a $10,000 account. $20,000 account, 6%. You would have made $600. Okay, so do you guys see what I'm seeing? And again, this is obviously, of course, trading at your own risk. There is risk in the market, and I can't sit here and say that everybody utilizes our strategy properly. There are still some students that are struggling, which is why we create the mentorship, which is why we have the ability for students to schedule one-on-one Zoom calls with myself or our other mentor, Ezra. Okay? This is us attempting to show you guys that this strategy is insane, and this is just scratching the surface surrounding what it is that we teach to the students. This is just the basics, guys. This is just the basics. Showing you all how literally the same exact price action on Bitcoin played out on XRP. And I guarantee you that if I go to Casper, the same price action played out. Just to prove a point. Screw it. Just to prove a point, okay? I'll show you guys. Just to prove a point, okay? This is random. I'm just going to go to Casper to show you that buyers and sellers both got tapped out of the market before the institutional move got put in. All right, so what can we see? Look at this. I already see it, okay? What can we see? Right here in this area, we see early sellers prior to New York session. We also see early buy positions. What did the market makers do? They come, they grab the stop losses from early sell positions. Then they pull back for the early buy positions. They grab liquidity beneath the early buy positions. And then they put in their institutional order. Would you look at that? Would you look at that? Okay, price action is different. Don't get me wrong. Okay, zooming in because that was a little bit choppy. Okay. Here again, I'll go over it. Look, what do we see? Prior to New York session, early sellers. Prior to New York session, 8:30 a.m., early buy positions. What do the market makers do? Push price action up into the stop loss of early sellers. Push price action down into the stop loss of early buyers. Boom. Then they put in their institutional order and shoot the market up into their directional favor. Okay? It's different price action, same principles apply. Taking retail trading stop losses. Okay? You guys catch my drift. That's how you can utilize these methodologies. That's why people that say hindsight testing and back testing and all this stuff is rubbish, it's not. That's how you learn how price action moves properly. That's how you learn how to utilize strategy properly. Okay, by back testing and hindsight testing it. By visually seeing what price action did in the past to potentially determine what it could do in the future. Okay? Looking for repetitive patterns. Real repetitive patterns, not retail resistance, not trend lines. Okay, look at this trend line pattern that got smacked out. Okay, not trading Wyckovian order block theories and methodologies. Banking institutions know that people are doing that. They're smacking out people's order block stop loss limits and things of that nature. Okay, we've been attempting to teach you guys this stuff, and we're going to continue to do so. This YouTube channel is going to grow, thrive. Really do appreciate it. In the next video breakdown surrounding Casper price action, I'm going to give you guys instructions on how to partake in the $100 Casper giveaway. Blessings to you guys. If this video breakdown helped you all out, really do appreciate it if you would smash that like button and thumbs up. I know that a lot of people, they hear my voice, they hear the confidence in me explaining this strategy, and a lot of people will say that it's cockiness. You have to understand that I've been trading this strategy profitably for over 3.5 years now. Okay, I've been trading these financial markets for almost 6 years. Okay, when you're trading a strategy that works, you will find that it brings you a level of confidence that is unprecedented to the normal human being. Okay, the normal every average day individual does not have a high level of confidence. In order to trade these markets properly, and I will repeat this over and over and over again until it bleeds out through the CYPRX advanced students, that you have to have confidence in what it is you are doing and attempting to do in these markets, which is trading against the smartest individuals in the world via the bank and institutional traders. Okay, the private investors, the whales with smart money. Okay, so if you're going to trade against them, you have to have a strategy that works in tandem with them, not against them. And 90% of individuals, that's why you hear that stipulation that 90% of individuals lose 90% of money in 90 days or less, right? If you don't want to be one of those people, you need to have a strategy that works. And I'm not going to sit here and continue to boast about the strategy. I'm just going to continue to prove it to you guys that what we teach here at CYPRX is what the bank and institutions do, okay? And we trade against what everybody else does. Everybody else freaks out. Everybody else is impatient. Everybody else is greedy. Everybody else is nervous. Everybody else isn't confident in themselves or their abilities to trade these markets profitably. And that is why we trade with the bank and institutions, taking retail traders' money. Okay? So I hope that this video breakdown helped you all out. Don't forget to smash the like button, subscribe to the YouTube channel. We're on our way to 5,000 YouTube subscribers in the next video release. I'll be giving you guys instructions on how to partake in the Casper giveaway. Blessings to you all. As always, be cognizant, be aware. Please, please, please be aware of your surroundings. There are zombies out there in the streets taking people's souls left and right. I cannot stress that enough. I hope that everybody has an amazing, amazing rest of your week. Really do appreciate the love and the support. Everybody take it easy, and I will see you all in the next video breakdown.